Now that we're in 2023, I want to see how the recent Toronto fall real estate market performed as a whole compared to the year prior in fall of 2021. There are a lot of metrics that we can look to study market performance. Listings, solds, average price, but I went a bit deeper and looked at number of showings, number of offers, and days on market as well, pulling stats from Broker Bay, which is the showing platform that is used by roughly 95% of all listings and by nearly every major brokerage. What I extrapolated from the data was the most clear indication that this past fall, Toronto's real estate market was being kept afloat by two types of buyers, and these same buyers will be the most active this spring market as well. I'm going to tell you who these buyers are and then go into the specifics by showing you the data and what it might mean to you as a potential buyer or seller. But first, for those of you that don't know me, my name is Jonathan Lee and I'm a real estate agent in Toronto. And if you enjoy this type of data-driven content, please hit the like button. It's how YouTube will know that my stuff is worth viewing and sharing. And if you want to see more of these types of videos, hit subscribe. I'm doing a video a week in 2023, and I hope to bring you some great value for your attention. If you're thinking about doing something in real estate this year and want to get a better understanding of what's actually happening out there, you can schedule a call with me through Calendly by clicking on the link below in the description. Now, the two types of buyers that are keeping Toronto afloat are one, upsizers, primarily those who are upsizing from a 1 or 2 bedroom condo. Young families, younger homeowners in the millennial age bracket who are upsizing to a larger condo apartment or condo townhome or freehold home. And second, first-time home buyers. While the market was undergoing a shift between the summer and fall of 2022, it was challenging to make sense of what was actually going on day to day. But with the fall market in the rearview mirror, it's given us a chance to take a moment and see where the dust has settled to interpret what actually did happen. A quick disclaimer before showing you the numbers. As mentioned, this data was all pulled from Broker Bay, which is a showing platform used by 95% of all listings. Because not every listing or brokerage uses it in the Toronto Real Estate Board, the numbers are not 100% complete or 100% accurate, but for the means of analysis, this will give us a very strong representation of what occurred in the Toronto market this past fall. These numbers are based in the city of Toronto only between September to December 2021 and the same season in 2022, and exclude listings in other municipalities and cities. If you're interested in seeing the same analysis in your city or municipality, leave a comment below, and if I get more than 3 comments for the same city or municipality, I'll do a video. Now let's have a look at that data. This past fall, almost every major metric that quantifies positive growth for the Toronto real estate market saw a drop off compared to the year prior. New listings were up 13%, while sales transactions were down 27%. The number of offers were down year over year by 34%, and of course, average price was also down by 2.5%. However, showings were actually about flat. This doesn't necessarily indicate that there were the same number of active buyers on the market. It could instead indicate that there were more tire kickers or that serious buyers were viewing more homes to try to interpret which properties actually offer the best value for money. One of the clearest indicators to the health of a real estate market is easily the sales to new listings ratio. In fall of 2021, 64% of all listings would sell. This past fall, only 41% of all listings sold. When we extrapolate this by property type, detached, semi-detached, freehold townhomes, condo townhouses, and condo apartments, we get 5 different slices of the story. Let's start with the freehold side first: detached, semi-detached, and freehold townhomes. So I put the data as it was provided by Broker Bay towards the top and have added in some calculated figures below. Here are the most interesting figures about freehold properties. Detached homes had a decrease in total number of sales and offers, but still had more showings from the year prior, up about 5% to 100,000 showings this past fall. Semi-detached homes were the only type of home whose average sale price was up year over year by about 8% to an average price of $1.292 million. Semi-detached and townhomes needed fewer showings until an offer was received at about 17.5 showings per offer received, while detached houses needed about 18.4 showings. Though detached homes had the fewest listings actually sell, they had the highest number of showings as a proportion of their sales. Detached houses averaged 55 showings per sale, while semi-detached averaged 48 showings and townhomes averaged 41 showings per sale. Both semis and townhomes had a higher proportion of their listings sell. In a hot market with high demand, you will have fewer showings per sale. In a shifting market with low buyer confidence, such as the one we experienced this past fall and continue with in early 2023, you have a high number of showings with few serious buyers. Lastly, as the market contracted due to fewer buyers on the market, we also saw fewer homes up for sale, i.e. listings. This resulted in the number of showings per sale up for all freehold home types compared to fall of 2021, but the number of showings per listing down from 2021. This means that the fall market was not as busy as the year prior, but did still have a high proportion of active buyers to active listings. So you might be looking at me spitting out all these numbers thinking, John, I don't speak Chinese. What the hell does this all mean? Well, I'm Korean, but so let me break this down. The fact that this past fall, semis and townhomes sold with fewer days on market, with fewer showings, at higher prices, all while detached had higher year-over-year showings is a clear indication that the majority of buyers in the freehold space were upsizers with limited budgets, and here's why. When you're starting out your search in a downward shifting market where neither the sellers nor the buyers are quite sure how long things will drop for, as a buyer, you're going to start by looking at the more expensive product, i.e. detached homes first, in the hopes that the sellers will be open to eating a big price hit in the softer market. And to their credit, some sellers actually did. But as buyers slowly got tired of trying to negotiate with stubborn sellers, they ended up drifting to the semi-detached and townhome markets, which are much closer to their realistic budget range. As such, detached home listings saw much more tire kickers, while semis and townhomes actually fared okay over the fall. We'll probably be seeing much more of this over the spring. On to condos. The most interesting sales figures with condos is that condo apartments saw the most minimal sales decrease, dropping only about 4% year over year, all while having the fewest offers of all 5 property types. In addition, condo apartments saw the smallest increase in days on market from 22 days on market in fall of 2021 to 24 days on market in fall of 2022. It seems crazy to think that condo apartments performed the poorest by nearly every market metric we use, but actually fared the least poor financially. But when you change the perspective that everyone needs a place to live and most first-time homebuyers are going to start at the bottom of the property ownership ladder with a condo apartment, it kind of also makes some sense. So what does all this mean to buyers or sellers? Well, much of that is going to depend on what you are planning on buying and selling. If this spring you're planning on moving from your starter condo to your first freehold home, these facts won't benefit you much, though you will still have an advantage of being in a slower market. However, if you and your family were looking to upsize from a smaller freehold, say townhouse or semi-detached, to a larger 2-story or luxury home, this would allow you to benefit both by selling in a more active submarket that still has a lot of buyers in it, and buy in a less competitive market that is continuing to see downward pressure in prices due to high interest rates. Conversely, this may also affect those that are downsizing in the larger 2-story or luxury market, who will likely have more difficulty selling in these market conditions unless they are open to slashing their prices significantly from the market highs of early 2024. For these potential sellers, I would weigh on what your long-term goals may be and if it would be beneficial to wait out the market and sell later this fall or in spring of 2024. So that's it for me. Once again, if you want to chat, you can click on the link below in the description and schedule a call with me. And if you found this information helpful, do me a favor and hit the like button. And if you want to see more, please hit subscribe, as I will be doing a video a week in 2023 and you'll want to catch some more of what I have in store. See ya!